The health of the retail sector, in many ways, sheds light on the health of the overall economy, all the way down to the individual level. It takes disposable income and consumer confidence to head out into your favorite retailer and make transactions for the goods and services you want. So when the retail sector is booming, it says that individuals are saving and earning enough money to set aside a portion of their income to be spent on goods and services they desire. But when retail is struggling, it says that people are not confident enough to spend their money or do not have enough wealth to dispose of. The year 2017 is looking terribly grim for the US retail sector. In fact, not even during the worst parts of the last recession did things ever get this bad for US retail. Just take it from Credit Susie, who recently said that, quote, barely a quarter into 2017, year-to-date retail store closings have already surpassed those of 2008. Yes, that 2008, the year the Great Recession officially kicked off. More than 300 retailers have already filed for bankruptcy in 2017, and it is being projected that a staggering 8,640 stores will close in America by the end of this calendar year. And some reports are suggesting that up to 25% of all shopping malls in the country could shut down by 2020 due to the industry's current woes. According to the Swiss bank's calculations, on a unit basis, approximately 2,880 store closings have been announced year to date. During the historical 2008 credit crisis, store closures peaked at approximately 6,200, suggesting that brick-and-mortar stores in 2017 are signaling that the U.S. economy may as well be back into the Great Recession. Some blame this retail bloodbath on shifting consumer behavior, with more and more sales happening online, particularly the growing dominance of Amazon. But the fact is that while online sales have increased significantly, they still don't make up for the total decline in sales in brick-and-mortar stores. Could it be that the average American, who is increasingly out of work and neck-deep in credit card debt, has no income to splurge in the real economy? Or are mainline economists correct when they blame things like the weather on retail woes? As economist and CEO of the investment firm Euro Pacific Capital, Peter Schiff puts it,
no, it's about excuses. First they said, oh, people aren't shopping because it's too cold. Now they're saying it's because it's too warm. I mean, it has to be just right. What is the ideal shopping weather? You know, this is all a way to rationalize the fact that the consumer doesn't have the means to shop because he doesn't have the income, he doesn't have the savings, he just can't afford to buy stuff. This is what is going on, and this is going to continue despite all the rationalization and all the excuses. The U.S. economy is going to continue to experience a contraction, you know, in real terms, because we are not a productive economy anymore, and we're still living off of credit. But once you have, you know, too much debt, you can't keep on spending money. And then when you've lost your full-time job and all you've got to replace it is a lower-paying part-time job, you've got to cut back on all the extras, you know. And you don't need new clothes. You know, you can get by without, you know, without buying apparel, and that's why you're seeing it in these types of, you know, stores. This is the discretionary spending that is going away.
Recent Federal Reserve data on debt backs up Schiff's words. Outstanding credit card debt eclipsed the $1 trillion mark in February, increasing 6.2% from a year prior. Credit card debt now stands at the highest level since 2008. It also must be taken into consideration that some 102 million working-age Americans are currently unemployed. With no employment, there is no income to be spent. And how can you blame the weather on that? So which retailers are bleeding out? Most of those filings were for small companies, the proverbial mom-and-pop store with a single location. But there are also plenty of household names on the list of businesses in desperation. Recently, children's clothing chain Gymboree has filed for bankruptcy protection, aiming to slash its debt and close hundreds of stores amid the crushing pressure on retailers. Gymboree says it plans to remain in business but will close 375 to 450 of its 1,281 stores in filing for a Chapter 11 bankruptcy reorganization. Gymboree employs more than 11,000 people, including 10,500 hourly workers. Hudson Bay Company recently laid off 2,000 people from Saks Fifth Avenue and Lord's Taylor. Hudson Bay Company's layoffs come on the same day that Ascena, the parent company of brands like Ann Taylor, Lane Bryant, and Dress Barn, told investors it will be closing up to 650 stores. Affordable luxury brand Michael Kors announced it would close 125 stores to combat brand overexposure and plummeting sales. And well, this chart pretty much says it all. In 2017, Radio Shack will close 550 stores. Payless will close 400. Rue 21 will close 400. The Limited will close 250. Family Christian 240. BB 180. Wet Seal 170. And the list goes on. As highs in the stock market are sold to the public as a sign that the economy is doing just fine, the real economy has hit a wall. The fact that retailers are closing up shop at this unprecedented rate shows that individuals are struggling just to make ends meet. And it's impossible to ignore the current unemployment numbers, which show that Americans are not bringing in the income that retailers desperately need them to make in order to survive. What will America look like when shopping malls and retail storefronts continue to shut down? Some of the country is already eerily mirroring what looks like a third world country. Going back to overall employment, this retail bloodbath is going to be very damaging, as retail sales associates are one of the most popular jobs in the country, with roughly 4.5 million Americans filling the occupation. This retail bloodbath is happening all the while retail jobs are being replaced with technology. So the next time you hear that the economy is doing just great, just take a look not just at the stock market, but the actual economy, where people have little money to spend and far less employment opportunities than they once had.